What's up, everybody? Welcome back to another video. With my journey, kind of taking everything into consideration with last week being NFP. I hope everybody had a great week. I hope nobody got their account blown. I hope nobody lost over their percentage or max risk percentages. Um, but that happens every NFP week, man. People decide to kind of go into the markets with a gambling mindset, and I think that's the last thing you want to do. So a little bit of advice: if you are going into NFP week with a newly funded live account or a new funded challenge, personally I would avoid it like completely. One thing you want to do is not be in a gamble mindset, right? When you go into NFP week. And I'll give you a very good example of what happened to me last week. So let's get into it, man. I wanted to make this video a little bit shorter than my previous ones. I know the last videos are pretty long, but I got to emphasize, in order for me to continue showing you guys my train of thought, my thought process, my analysis, what I think going into the markets, I have to give you the full rundown of what I'm thinking for that day, right? So to kind of put this very simple, I do have trading rules. A lot of people have been asking me, hey man, what are your trading rules? Um, very, very easy. If you notice, I have my settings set to New York local time, right? So I want to make sure that I am on New York time whenever I am taking my trades. So that's number one. Number two, I have a trading hour that I try to keep it very tight. Sometimes if I find a setup before or after, I do take the setup. You'll see some examples here today from last week. Um, but most of the time, my rules do uh, apply from the hours of 10 and 11 a.m. New York local time. So that is when I am in the markets looking for a setup, whether we are targeting buy side liquidity, sell side liquidity, or we're looking for a fair value gap to enter, right? Lately, I have been emphasizing more of one-to-ones only because I've seen them get respected a little bit more. So you can make money with a one-to-one risk to reward ratio. It all comes down to the rest of the week and how you are applying risk management, right? So let's go ahead and dive in and get this started. So again, you guys already know this. This shouldn't be anything new. We start from a top-down analysis here. I'm only going to start from the 15-minute time frame. If you look at this top corner, these are my time frames. I use the weekly, I use the daily, 1 hour, 15-minute, 5-minute, and 1 minute. And what does this do up here? What it does, all it's doing is the same area that we're going to be looking at, just breaks it down from a higher time frame. For example, each candle in this chart, you notice it's on a 15-minute time frame. So each one of these candles that prints it's 15 minutes. It takes 15 minutes in time, in length, to be able to print this candle. So this candle, for example, is a 15-minute candle. It takes 15 minutes for this candle to go up and down, do its motion, do its thing, and then finally at the end of the 15 minutes, it prints this next candle, right? So that's all it is. For those of you that are still new to this and are trying to figure out, what time frames are best, again, I here use top-down analysis strategy, which means that I'm looking at a higher time frame to look at my directional bias or to see where buy side or sell side is resting, right? And what do I mean by buy side or sell side? For example, here I have buy side, right? This is a clear indicator that there may be some stop losses up here for the ones that are sellers. And the same thing for things like, for example, down here, this would be a sell side, which means that there are stops down here for buyers, right? And we'll go in a little bit deeper, probably in another video if you guys want some more information on that. Guys, just leave me a comment below. I'll be more than happy to explain that. And again, I'm a student just as well as you guys are. So I'm learning every single day. So I'm going to try and make things the easiest possible when it comes down to explaining what these terms are and how to use these strategies, right? So let's get right into it. So Sunday, when we uploaded the last video, we were talking about where the new weekly opening gap was. And we talked about that in the last 2 or 3 videos. What that is, all it is the close on Friday, which is this candle right here. If you look at the bottom cursor at the very bottom, it says Friday, right? 4:45 p.m. That is, it closes at 5, but because, mind you, we're on a 15-minute time frame, it's going to show that time. But market here closed on Friday at 5, and then here it opened. You notice that I have those 2 levels marked up as a new weekly opening gap, or also known as NWOG, which I stretched out all the way to the rest of the week, right? And you can see on a larger time frame, it acts as a magnet, right? It opens up, leaves that gap open for the majority of the week. It goes away from it, plays around throughout the week, and immediately comes back in and acts as a magnet, right? Not only does it come back once, but it comes back up twice into it, taking out this resting buy side liquidity, right? And we'll talk about that here in just a few minutes. But for Monday, this was my thought process, right? Analysis. What are we looking at? What is the breakdown? How are we looking at this market? So Sunday, we saw that this candle broke down lower, creating this new weekly opening gap, and also a volume imbalance, right? Where there's volume that has a clear gap, that there's no price printing in between. So we see price kind of playing around. At this moment, whenever I see charts like this, my attention is right here. This area is where I have my eye, right? This area. Why do I have my attention here? Because if you look down here at the time, this is already morning time. This is when I'm already up looking at the markets. I'm usually up around 7 a.m. Houston time, which would be about 8 a.m. or so, New York local time. So if you look here, this is right at about 8 a.m. New York time. So what I'm looking at is I marked this fair value gap right here. We had already, on a higher time frame, 15-minute time frame, I marked this up as a fair value gap. If you notice, I included the volume imbalance. This gray rectangle that you're looking at, I marked that up from the close of Friday to the remaining opening gap. If you look at this candle, it left a fair value gap. I marked it all the way to the top of this blue candle right there. So that right there is our fair value gap. I noticed that we had already tapped into that, which would have been initially the best entry for that morning for shorts, right? That's what we were looking at. I was looking for shorts, which had already moved away from our direction, which, that we were attempting to enter. I did mark up this fair value gap. Let me go ahead and mark it down for you guys right there. If you look at this blue candle, that would have been a perfect entry right here. It would have stabbed right into that fair value gap and immediately dropped, targeting this sell side here or even lower, right? I did not take that. It was not within my time frame. I was not looking at the markets at that time. It was 4:30 in the morning. I was not up yet. So I'm trying to catch something that's within my time frame. So here I see the market reversing. What I'm looking at is, my process was looking to see if there was some sort of strong bullish momentum similar to this right here. Candles kind of breaking structure, right? Which here I kind of see it's not as clear, but this candle kind of wanted to stab right above this. And when I saw that this left a fair value gap. And let me go down to a smaller time frame. This area right here on a 15-minute is the same that we're going to be looking at right here. Actually, I apologize. Right here on the 1-minute time frame, right? So let's take a look at it a little bit closer. So these two bullish candles, gave me some indication that market may want to go ahead and tap into that, and then tap into either this fair value gap or stab right back into this fair value gap. And that's why I marked my buy side liquidity. Reason being, I was looking for the market to reverse back into this, either this fair value gap or this one, to then drop, right? That was my thought process. That's what I was looking for. So in a more easier way to put it, I was looking for a scalp to reach into one of those two fair value gaps and call it a day, right? So I was trying to make it easy on myself. Instead, I ended up taking a loss. Why did I take a loss? I took a loss, in my opinion, because number one, I was trading before my trading hours. If you look at the time, it was 8:30 in the morning. I normally don't trade until 10 a.m. So that was rule broken number one. And I'm going to lay it out for you guys. I'm not going to sit here and say I'm 100% profitable trader every single day, right? I'm going to show you guys exactly what I'm doing and what my thought process is moving forward and how we can fix those things, right? Because I'm a student as well as you are, and I want to show you guys, and as well as for myself, going back and looking at my trades, what could I have done better, right? And how does this benefit you? This benefits you in a way that shows you what to do and what not to do in the market, what to trust and what not to trust, why take a trade or why not take a trade, right? Because if I can help you guys reduce the risk or the loss on your new trading journey, by all means, that's what I'm here to do, right? So on a 1 minute time frame, these bullish candles right here, that gave me an indication that we could potentially have some sort of fair value gap where we can retrace back into here and then go short. So when I saw that, this was the initial fair value gap that I was looking at. If you look here, this is what I was looking at. From here all the way up here, this candle had not printed, these candles had not printed yet. So that's why that's marked up the way that it is, right? This could have been a beautiful entry to target right here, this gap. But again, that's not the trading time that I'm in. I was looking at the markets at this time at 8:30, right? When it came down and I saw that it was already tapping into this fair value gap from previous price printing, I took an entry, right? Which I shouldn't have done. I shouldn't have done it at all because it wasn't my time to take a trade. So that was an immediate loss. It went straight directly into stop loss, which if you guys look at the higher time frame, remember, we're already in a bearish day. So there was an entry here, boom, entry there for shorts, entry here for shorts. And right here, during open at 8:30, that's when it started making its way down, right? So we took an immediate loss there. So I told myself, let me go ahead and wait a little bit longer and let me see if we can see price print a little bit more, because it is okay to lose a trade and just watch price continue doing its thing. Why is that okay? The reason why that's okay, think of it like this. I'm gonna give you a very easy scenario. Would you rather take a unnecessary loss in the market because you're wanting to jump in just to get involved, and now you're looking at your account like, man, I shouldn't have taken that trade, right? You're in drawdown, number one. Two, you took an unnecessary risk. So you took a loss. It could have been 1%, 2%, 3%, whatever you're risking. Now you're down for the day. So you're already starting the week below what your threshold was originally, right? Or do you want to allow the market or the candles to print a little bit longer and see if your trade would have played out? Mind you, if you would have let price print a little bit longer, you wouldn't have been, number one, in that loss. You wouldn't have been taken out. You wouldn't have been in drawdown. So on the contrary, you would have been happier watching price take off without you, even if it would have hit your, in quote, stop loss, right? Just watching price. Because what does that do? That gives you a little bit more insight on what the market is wanting to do, right? Number one, you're watching price and watching it go into the direction that it's going to go for the day, and you're not taking any losses, right? So it's okay to watch price print or these candles print a little bit longer, because remember, there will always be another trade. Always. You're going to be able to trade tomorrow. You're going to be able to trade the day after that, next week, next month. There's always another setup. So if you get that feeling, man, I need to get into this. I need to get into this trade. I need to jump in right now. Price is going to go and run away from me. Let it do its thing. Let it go. And I promise you, you're going to feel so much better afterwards, whether you were right or whether you were wrong. Because you did not take that trade, you will feel much better because you did not take a loss. I promise you. I promise you. Right? So this is one clear example. Price went against me, immediately hit my stop loss. I gave price a little bit more time to show me what it wants to do, right? We had already missed the move for shorts. And if we look here, this was a fair value gap that it had tapped into, which I was trying to see if it was going to reverse up higher. It didn't. It immediately came into my stop loss, ran shorts completely really fast. 1, 2, 3, 4 in 5 candles, came and took out this sell side, right? That is what the trade should have been. The trade should have been shorts here, here, or here to target this low. That was the direction of the day, right? So moving forward, time here is 9:30. Price is opening at that time, right? So what does it do? It comes down. You can clearly see it comes down, takes out sell side right here that we had marked up previously, takes them out, comes back down. And right here, my mindset is, okay, we have already taken out sell side. Once it takes out sell side, my thought is this whole move is going to come right back up and fill at least these gaps right here. That was my thought process. And that's why you see this trade here. So let's take a look at that trade. Sell side is here on the 15-minute, which is right here on the 15-minute time frame, right? So that way you guys know exactly where we're at. And then right here, we're going to zoom into a 1-minute time frame. So let's take a look at this a little bit deeper. This trade would have been perfect. Why? Why did it not play out? Let's talk about it. This is the trade that I was looking at. If you notice right here, we had already taken out sell side from earlier. So we took that sell side and immediately you see these blue candles, right? That's giving me an indication that this market has some kind of rejection from this area altogether. So it has some strong bullish momentum. And what am I looking at? I'm looking for a fair value gap, right? And we see that from here to here. If we extend that in time, you see that this candle, this blue candle, gave us a gap for us to enter. You notice that as soon as it came into this 50%, and I'll show you what that is. Most of you have been asking me, what is the 50% or what is consequent encroachment? Consequent encroachment is, to put it in easy terms, it is the 50% zone of a fair value gap, right? So if I get my Fibonacci and all I'm marking up is just the 50%, right? So from here to here, you notice draw out a line right across. I'm marking up the 50% so you guys can take a look at it. I'm going to take off the Fibonacci so you guys can see that line. That line is about 50% of this fair value gap on that candle. Let me go ahead and zoom in a little bit. If you notice where this candle touches and this last candle touch, this is halfway from this point to this point, right? So that was my entry right there. I was in drawdown for maybe about 2 to 3 minutes and immediately started going up higher. I was in profit. I could have made profit there, but it being morning, right, being right at 9:30 right here, a little bit after open, you don't know if price is going to go up or down, right? We don't know that. We want to wait for price to go in a certain direction first. So it was very risky for me to take this trade. Number one, because it's outside of my trading time, right, which is 10 a.m. So I was targeting this high here. Why was I targeting that high? Because I knew that we had left all this price action up here, leaving open gaps. So I was targeting here. Had I targeted a 1-to-1, if you look at the ratio, right, this right here, 2:16, I was technically targeting a 1 to 2.16, which is not a 1-to-1. So if I was to move this to a 1-to-1, you notice that price would have immediately hit my take profit. So that's another lesson that we want to journal for our trading journey, right? We want to, anything that happens like this, you want to go back and journal your trades. Why is it good to journal your trades? Because it gives you some form of history. Number one, it gives you some form of experience to know, okay, I've seen this before. I know what it's going to do. I know what it's likely not to do. So you know what to expect, right? So when you go back and journal and put this in your journal, whether you're writing it down, whether you're logging it into TradingView, wherever you're logging this, right? Make sure that you write down how you felt, what was going on during that day, what time frames you were trading, what kind of strategy you were using, and also never use negative words, never use any kind of negative language in your trading, because you don't want to tell yourself, man, I'm such an idiot. I should have held, or I should have moved my stop loss, or I should have done that. I'm so dumb. You don't want to do that. Why would you do that? That's something you should never do. On the contrary, you should give yourself some positive words. Speak in a positive manner. Why do you want to do that? Because as a day trader, you already have everything against you. You don't want to go into this with the negative mindset. You want to go into this with a clean, clear conscience and a clear, positive mindset, right? So in this case, yes, I would have won, right? I would have made and tapped my take profit for the day, but I did not. Why did I not do that? Because I was targeting something a little bit higher. So for next time in the future, we're going to be targeting 1-to-1s only, right? And then we're going to put that into our trading journal and see how it plays out, right? So more times than none, a 1-to-1 more than likely will tap into take profit, right? As much as you new traders are wanting to hit the home runs and get the big trades and take the big wins home, you can be profitable with the 1-to-1. As a matter of fact, I took my funded account and was able to take out payouts on only 1-to-1 trades, right? So that's what I'm going to be logging into my journal, why we took a loss this day, or for that trade specifically. So immediately went down, took me out, did not work out. So if you look here, completely destroyed me. I'm so thankful that I had a stop loss. Had you not had and been trading without a stop loss, look at the amount of drawdown you would have been in. Not on, let alone the drawdown, you could have been taken out of your trade, margin called, right? Your entire balance could have been wiped out. Or two, you would have lost your funded account. So this is a very good example to why use a stop loss, right? I would much rather take this loss right here than to be in drawdown this whole move right here, or potentially lose my entire account because of this. So I cannot stress enough how important a stop loss is. Use a stop loss always, no matter what. Again, I would much rather take a small loss than take a huge loss or liquidate my account, right? So moving forward. Here, I was being very impatient. I was waiting for the PM session to roll around. So let's look at the higher time frame. You notice that we have already tapped into this fair value gap that I had marked down from previous times. If I'm not mistaken, yes, daily. It's a daily fair value gap. If you look at it, moving back in time, this is what I have marked down. That is a huge move up. So I have that marked down as a fair value gap on the daily. I was aiming for consequent encroachment, which is 50% of that gap from these moves to the short, right? But because I had already taken 2 losses, it immediately reversed, not tapping into consequent encroachment. I was still a little confused as to what the market wanted to do. When I saw this move, which is these blue candles, just on a smaller time frame right here, I told myself, well, maybe now that we're on the PM session and we have already taken out all of sell side, maybe we want to reverse and we want to target the higher open gaps from this morning. That was my initial thought, right? And here we go again. I was aiming a little bit too high. If you look, I was aiming at a 1 to 2. I was not aiming for a 1 to 1. Had I aimed for a 1 to 1, I would have definitely got a take profit. So let's move that to a 1 to 1. You look here, risk to reward ratio 1. We would have been at take profit. That trade would have, both of those trades would have worked out in my favor. But because we were targeting a higher target, we were being, in a sense, I guess in a way, a little bit more greedy than normal. That is a reminder to the market doesn't owe you anything. The market doesn't need to necessarily play out in your favor, right? You want to take trades that are high in probability. And what is a high probability? Normally, more chances than none, a 1 to 1 will play out in your favor. This was my thought process. We were already moving in a higher direction, right? I saw that this fair value gap was created. You notice it was 12:32. We were already after lunch, getting closer to the PM session. And I wanted to take this fair value gap because I saw that direction was being very consistent, moving up. I took this trade at this fair value gap. That would have been my entry right there. Played around, very little drawdown. It would have taken my take profit and we would have made profit for that day. But in fact, we did not. Let me go back a little bit here. You guys can see it got very close to my personal take profit, which was a little bit higher than anticipated. It didn't. It immediately reversed, and then I got taken out. So that was the lesson there. For last week, lessons were going to be that personally for me is going to be simply just taking 1-to-1s moving forward, especially because we're already in Q4. We want to be careful, right? We're getting closer to the holidays. We're getting closer to the end of the year. This year is going to be a little bit different for me because I'm learning ICT concepts. And at the end of the year, I personally don't think that setups are going to hold longer for more than 1-to-1s. But that's just my opinion. If you have a different opinion or view on the charts or from experience, by all means, use what you know. If it's been profitable for you and if it's been successful, continue using it, right? But for me personally, because this would be my, I guess you can say, my first holiday season using ICT concepts, I'm going to be very careful, right? So moving forward, only trading 10 to 11 timeframes. If I do see a high probability setup before or after, all I'm doing is reducing my risk and taking 1-to-1s, right? So that was Monday's day. We ended up taking 3 losses that day, so it didn't play out in our favor. So let's take a look at Tuesday. Tuesday, the same thing, right? So Tuesday's right here. So this is that last trade that we took. It did, if you look at the 15-minute, it did play around this fair value gap and then immediately went above to where it could have been another great entry. But because it was already 3:45 p.m., getting closer to the end of the day, we didn't take any more trades. Overnight during London session, price did fall below, covering these gaps down here as well. If you look at that, it came back down here. Played around here a little bit, created these equal highs. I saw those highs in the morning get taken out. So if you look at the time at the very bottom, that is 8:15 on a Tuesday. I noticed that price was respecting here. I did mark this down as a sell side liquidity because there's so many stops here. So if you were taking price in longs or buys, more than likely your stop would be either here or down here. So I marked that down as sell side, right? And I had that extended over all the way over here. We have not yet tapped into that. That may be something that we may be looking at later on this week. I did see equal highs be created here. So I marked those down immediately after 9:30. You notice that this is 8:30. That is when I'm looking at price. 9:30 at the bottom is open. Open immediately went into a bullish momentum targeting this buy side liquidity. So let's take a little bit closer at that. So once buy side was taken, let me actually extend that out in time right there. So this is Tuesday morning right here, open. During the open, you notice that there was a great entry right here. I did not take that. I don't like taking trades at open because it's, how can I put this? Taking trades at the open is a gambler mindset, at least for me, because you don't know if price is going to go against you, if it's going to whipsaw and wick everybody out. You don't know what it's going to do. So we're going to let price play a little bit longer. Right here, 10 a.m. breaks that buy side, gives us an entry right here, continues up a little bit higher. And what am I looking at? I'm looking to see if price is going to return to our new weekly opening gap. New weekly opening gap is up here. What is this? That is buy side. If you look at this, that's buy side right there. This is the buy side from Monday that I was marking, that I was targeting, right? So that's what I was aiming for. Did it make it there? Not necessarily, or at least not that day. So buy side had been taken. Awesome. I was like, well, maybe we want to go up here. But when I saw this, my train of thought changed. I saw this bearish candle being created. And because I saw this bearish candle created, I thought that maybe because we're breaking structure here and we have an inversion fair value gap there, this could potentially drop to target those lows that we were talking about back here, right? Which are these. I'm thinking maybe now that price has taken buy side, we want to go up there and then go all the way down, take these guys out, and then continue up. That's what my thought process was. That didn't play out in my favor, right? So I took the entry when it came back down here and it created these gaps that I have marked down right here. I thought price was going to come back in, tap into this gap right here. Even if it was right here at this gap, I took an entry there. I put my stop loss immediately right above, thinking that I was going to target at least this low, if not lower, but my target was here. So you notice I did take a 1-to-1. It went against me, which is totally fine. Again, I would much rather be taken out of the stop loss than hold all this right here or potentially be liquidated out of my account completely. So that didn't play out in my favor. Notice it is during my trading time, and sometimes it's just not going to play out, right? What was the move that we could have potentially been looking at was this one right here. That would have been an amazing trade. It would have dipped into that fair value gap that was created and then gave us a 1-to-1. I did not take that. I was targeting lower prices. So moving forward, price continued to rally above. It gave us this sell. Once it reached and gave us this strong sell, I thought we could then potentially see another sell. Why? Because to me, this right here could be considered a market structure shift. What is a market structure shift? A market structure shift is, in very plain terms, the market is breaking zones that normally would have to be respected, right? So now that we have broken below this, I'm thinking, well, we could kind of what we were looking at here. Now that you see how price broke below here, price broke. This is a very minor market structure shift. So this minor market structure shift, it created a gap. These are potential entries that I want to get into. These are trades that I want to get into like that, right? It breaks market structure. It didn't respect that at all. This could be a potential entry, right? That's all that market structure shift is. It's just the shift in the direction where the market is going. So when I saw this here, I thought, well, okay, on a 15-minute time frame, this is clearly a very strong bearish candle. Whenever it broke this, I thought to myself, maybe it does want to, because it created this fair value gap, maybe it does want to tap into here and then sell off and target somewhere around these lows, right? Not only did it create a fair value gap, but I marked the consequent encroachment of a 15-minute candle, which is what, again, 50% of that move. So this is consequent encroachment. You see that line right here. And I'm looking at price fall, fall, fall. I see it retrace, come back into this fair value gap, which is beautiful for a sell to target this low, but I missed it. I didn't get into that. I waited a little bit longer to see if potentially giving us another entry. I did put my stop loss here because I could see price continue up higher to potentially tap into this fair value gap. But because price was already in a strong bearish move, I did trust that this was going to hold, right? So my entry was right here. When price took this out, I wanted to see if price was going to come back and potentially give us another entry somewhere between this area. Why this area and why not down here? Because I wanted to see these blue candles get tapped into. And sure enough, it did. I marked this, I think on a 5-minute, if I'm not mistaken. I took my entry here, put my stop loss right above that high, and I targeted these lows right here. It did take a little bit longer for this trade to play out. You notice we were in a little bit of drawdown. We went into profit, drawdown, and then eventually a little bit later, right before the 1 p.m. session, we did see that take profit and come into fruition, right? So for the week, that would have been 3 losses on Monday, 1 loss on Tuesday, a total of 4 losses altogether. But this trade right here basically covered the first 2 losses of the week, right? So we were technically almost 2 losses in. So not the greatest week on a Tuesday, but overall a great learning experience. So moving on to Wednesday. Now that we are down here, I see prices going up higher. It did eventually come back to take out this buy side liquidity from Monday, right? It took them out. So now that I'm looking at this getting taken out, right? What happens when stops get taken out? Typically, you see a reversal or a continuation, one of two. If we're looking at reversals, if we're looking at something like this go down, you want to use, again, proper risk management. Because, again, yes, it may look like it's going to take stops, right? People who had their stop losses here, it's going to wick them out, take them out, and then potentially reverse into some sort of fair value gap or to the next low. Here, you can see that it came back down into a fair value gap, and then it continued up. So let's take a look at a little bit deeper on Wednesday. I took this trade at around 8:30 in the morning. So let's take a look at what price was doing at 8:30 in the morning. Over London at night, it took out the buy side. It was playing around this price and then came back down around 7:15 in the morning. Again, that's the time when I'm just now waking up. This would have been a great entry right here, actually. Right there on a 15-minute. So if you notice, trades and price, the market is fractal. What does fractal mean? Fractal all it means is that anything that you can find on a 1-minute time frame, you can find on a 5-minute, as well as the 15-minute, as well as the hour, the daily, and weekly. So the same setups that I'm looking at on the 1-minute could also play out on a higher time frame. So if you're a swing trader, and for those of you that aren't familiar with swing trading, you're holding positions longer than potentially a day, 2 days, sometimes weeks, depending on what type of trader you are, right? So if you want to use this type of strategy on a higher time frame, by all means, put it into a strategy, test it out, and see if it plays out for you. See if it works for you, right? All the markets are fractal. Again, all that means is that anything that you find on a 1-minute, you're going to find on a 5, 15, 1 hour, daily, weekly. So all these strategies and all these moves are all simultaneously playing out on all time frames, right? So this could have been a beautiful entry if you had alerts set up to fill in these gaps, or, you know, some type of alert letting you know, hey, that this zone has been tapped into. That would have been perfect for you for an entry, right? But once I see that prices here in the morning and it's continuing to move up, what I'm looking at, I didn't take this trade, but what I'm looking at is to see if this is going to potentially reverse into that volume imbalance, right? So if we take a little bit closer look, if you look at, this is the 15-minute time frame, and this is the 1-minute time frame. So what am I looking at here? Once I see that all these are being taken out from here, see if I can mark that up. Buy side had already been taken out here. So this leaves this buy side. Technically, it's really up here because that's the highest point. We dropped and immediately started reversing up. So what does that tell me? We're already taking out these stops up here. We could potentially, again, what? Either reverse down or give us an entry for a continuation. So this was 8:30. This was open for New York session. We don't have equities open yet. That's not until 9:30, which is right here when it reversed down. I felt confident that we wanted to tap into that volume imbalance from Monday. So as soon as I saw this fair value gap created, I took my risk. I took that entry right there when it came in and tapped into that. I put my stop loss at the previous low, and we aimed for a 1-to-1. If you look here, risk to reward ratio 1, which is going to be this high, right about there. It took about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes in this trade. And it took us straight to profit. After that, I closed the markets. I didn't even want to look at it because I had already had losing days on Monday and Tuesday. I did not want to go back in and risk more than what I needed, right? So that puts us at pretty much at break even from Monday. 8:30 was here. You can see beautifully it tapped into the fair value gap and volume imbalance from Monday and then immediately reversed. And this is why you want to be careful. I've been told that Wednesday on an NFP week is very risky to trade. So I kind of wanted to be in and out of the market that day before the open, actually. So notice that I'm not trading within my rules, which is 10 a.m. to 11 a.m. 10 a.m. would have been right here to 11 a.m. Could have there been a potential entry? Absolutely. We could have seen this as a market structure shift, right? So from where my cursor is across, you see that that broke this structure right here, came back into a fair value gap. This would have been a beautiful entry, actually, right there. So if you look at this gap, it came back down, it broke market structure, came back down, went back into the fair value gap, and then probably would have given us a 1-to-1. If not, of course, if you see here a little bit longer, targeting what could have been some sort of sell side, which is right here, could have entered here, immediately went into that, or you could have dug deeper. You notice that that trade continued on down. On a higher time frame, let's take a look at how far this went down. It just looked like it took out this intermediate low right here. And it actually, if you look at the 15-minute time frame, if you look a little bit closer, you see this gap that I'm marking up right here? That would have given us a beautiful entry for a long right there. Could have put your stop loss at this previous low and then just rode it all the way up, right, for a reversal. But again, we have to stick to our rules. I'm not looking for home runs, especially this Q4, especially getting closer to the holidays, and especially because it's NFP week, right? So that was our trade for Wednesday. Now we're looking at Thursday. Thursday was a very risky day because we did have, again, news that following day. I didn't trust the market so much, but this was my trade that day. We talked about how that fair value gap was left open and then tapped into with these candles Thursday overnight for London session. And then it started to create higher highs, and breaking these structures, right? So it started disrespecting PD arrays, or what some people would say what market structure is. So what I mean by that is it's taking out this low, this high right here, right there. It's taking out this high right there. taking out this high. You see what I'm saying? So there's a pattern. It's not wanting to continue down. If it wanted to continue down, it would have easily tapped into this fair value gap and then went lower. Tapped into maybe, this order block here and then went lower. Another like fair value gap here went lower, right? It didn't respect any of that. In fact, it disrespected all of those zones and continued higher. So what does that tell me? That's a clear indication that it wants to continue in price, right? I originally had this marked up that day or that morning. What time is that? 8:45 a.m. So I had marked up this fair value gap just because it stood out to me, especially at 8:30. I wanted to see if price wanted to come in and fill some of these gaps. So let's dig in a little bit deeper. This is that fair value gap that I had marked up on a 15-minute. Again, because it was NFP, I wanted to get in a little bit earlier and get out earlier instead of waiting for the rest of the day. So when I saw this fair value gap being created, and not to mention all this price movement being respected and taking out highs from the previous day, I saw this fair value gap created right before equities open. It came back in. I took a risk. I said, you know what? I'm going to go ahead and put my stop loss here. And again, if you look at the ratio, we're only taking 1-to-1s. Thursday was beautiful. Within 1, 2, 3, 4, 5, 6, 7, 8 minutes, we were out of that trade, right? So this trade was beautiful. There was immaculate price delivery, right? We didn't over exceed or being greedy, trying to target higher profits or anything like that. It's very plain and simple. And there is a saying that goes around that says, once trading becomes very boring, you know that you're successful at it. So that day was exactly how I was feeling. I was feeling like, okay, do I want to get in another trade? Do I want to continue looking at the markets? But I told myself, I've done that before. I've taken a winning trade and then wanted to go back into the market. And it's just trading psychology. You go back into the markets looking for another trade because you already took one win, right? So because that win was extremely easy, and it played out in your favor, you're feeling very confident. At that point, you have chemicals in your brain, dopamine, telling you, wow, this feels amazing, right? Because you just did something great. You just got paid. So naturally, you want to go back in, and because it played out so easily, you want to go back into the market, you want to enter another trade, and what happens? Tell me if I'm wrong. You jump back in and you give all your money back. Your second trade typically will lose. Why? Because you're not in the right state of mind. Because your brain is full of dopamine chemicals at that moment saying, I can do this. It's so easy. Let me go back in and do it again. And what happens is you go back in, you're not thinking clearly, you're thinking with a gambling mindset, and then you take a loss. And at that point, not only did you break even, but you potentially lost more than what you made that morning on your first trade. So don't do that. Once you make your one win for the day, close your laptop, get off of the phone, stop looking at the markets, and enjoy the rest of your day, right? At the end of the day, that's what we're here to do. Take a trade, get your money, get out of the charts, and go enjoy the rest of your day. That is why you did this originally to begin with, because you don't want to be stuck in the markets all day. Just like your job, you're coming here to learn how to trade because you don't want to be stuck at a job working for 8 hours. Tell me I'm wrong. Tell me I'm wrong. You're learning the skill because you don't want to be stuck working 8 hours a day doing the same boring thing. You're learning a skill that you could potentially make money within a matter of minutes and be done for the day. Go work on something else. Go read a book. Go enjoy time with family. Go enjoy time with your spouse. Go enjoy time with your kids. Go look and learn for a new skill. That is the beauty of trading. That is the reason why we trade, because you're trying to gain back your time. Simple. It's that simple. You trade to create more time for yourself. That is the idea for trading, right? So moving forward, after that trade on Thursday, I didn't take any more trades. I wasn't planning on trading Friday. NFP was that Friday. Clearly, you see right here at open. Equities open 9:30, came back in. It didn't take me out if I would have held, but it did go back up, and then immediately reversed, right? So it looked like it wanted to tap into this fair value gap. It didn't necessarily reach that. But again, because we have already taken our take profit, my laptop was already closed at this time, so I was not looking at price or anything like that. I was already enjoying the rest of my day. Let's look at Friday. Friday, I did not take any trades, simply because of the fact that NFP is very volatile. I don't want to risk my money where there's a higher chance of me losing my money, right? So if you know that that day is going to be very risky, do you really want to go into that market and potentially lose more money? Me personally, I don't want to risk it. You got to think in probabilities, right? And I always say that, I stress that to everybody. Think in probabilities. Friday on NFP week is the number one day where you are almost guaranteed to lose money. So if I know that I'm almost guaranteed to lose money, I'm not going to waste my time going into the markets and try to gamble, right? Because I'm in this to conserve and grow my capital, not to gamble it and lose my money, right? Because at the end of the day, that's what we are. We are money management traders. So I didn't feel comfortable going into the market, right? And honestly, it was very peaceful knowing that I was not in the markets, knowing that I wasn't risking anything that day and I was already up for the rest of the week made me a happy camper, right? So Thursday's trade was right here, came back down, completely went above NWOG for the week. And then Friday, it completely destroyed everybody. It was very easy to see on a higher time frame. Over London, you can see price just kind of floated around here, creating liquidity or engineering liquidity. It looks like 5:45 a.m. and 8:30. At 8:30, this is news right here. That's NFP. It came back, took everybody out that was in longs for the previous day, and immediately reversed higher, right? There's a strategy that ICT talks about. It's called TGIF, right? Thank God it's Friday. It's a move where it breaks to one side and then it almost creates what most of you guys, if you have been trading for a while now, most of you understand it as in some way, shape, or form, break in market structure, and it forms some sort of, or respects some sort of resistance. And I'll show you guys here in just a few. So you notice that NFP came back down, created these bullish candles, and then came back in to then later go higher, right? So that is the thank God it's Friday strategy. Again, some traders may see that as a break in market structure and then coming back and supporting resistance, right? So most retail traders can see this as, oh, maybe it broke structure right here. It's going to come back in. It looks like it wants to hold right here, and then they would take a long. Some of them would be taken out. Some would be seeing this as resistance and then taking longs there. I was looking at the market. I wasn't taking any trades. I just kind of wanted to see what zones it was going to respect to see if that TGIF strategy would work or how it would work and what was going on throughout that time frame, right? So on a 15-minute time frame, we see sell side being taken out, and then you see immediate bullish candles right here, right? So let me go ahead and zoom in a little bit for you guys. This is that candle that took everybody out. You notice that it took them out immediately. There was no way anybody could have survived that. And then at 9:25, 9:30, equities open. After news had already hit, it gave us this bullish direction, right? Came back down. This was actually a really good trade. Again, I wasn't trading, but if you're looking at price and see if any kind of setups were going to hold, this right there, that fair value gap looked like came back in, respected. You notice it didn't close inside the box, and then immediately went higher. So you could have taken that for a buy for a 1-to-1. That would have been a great trade. Notice this volume imbalance right here. I marked that up after this move. I was trying to see if price was going to come back into this fair value gap. That's where you see this box marked up. It did. And you notice that if you look here, it respected the top of that fair value gap. You see where the candles close? It did wick down into them, which would have been a great entry, which is what I see here. You see me practicing price entries, and then immediately reversed up, right? So, oops, I'm sorry. But that was the, had I been trading that Friday, this is what I would have seen and taken. I didn't take it, to make that clear. I didn't take any trades Friday, but it did play out in my favor. So after it tapped into this fair value gap, came back down and created these relatively equal high or buy side liquidity, which is what you could have targeted for long-term trades. But because we're only taking 1-to-1s, this was my practice trade. It came back in, dipped into this fair value gap. I took an entry there, or could have taken an entry there, and targeted a 1-to-1 into this fair value gap. And if you see here, it delivered price beautifully, right? After that, if I move my cursor away, you notice that price did come into this volume imbalance perfectly, and then it just completely went away from us, targeting those equal highs, or also known as buy side liquidity, right? This is another fair value gap that I have marked up that I just didn't get tapped into. I think, if I'm not mistaken, that's on is it on a 15-minute? Take a look. Yeah, that's this fair value gap right here. And this is from November 29th, which it actually did tap with this blue candle and then sold off completely. You notice that was a beautiful trade. But that is just something that I keep marked up to see if price is going to respect. Notice it came back really close into that. It didn't necessarily tap into it. Is it probable for it to return there? Yes, absolutely. Are we expecting price to do that? No, not at all. But that's it, guys, for NFP trades. I hope you guys have enjoyed the trades and my uploads that I have been making. If you guys need help with anything else, or want me to talk about something else, trading psychology, that's something that is in a topic in my DMs a lot. How to, deal with the excitement of being in a trade, how to manage a trade, what to do when you're in a losing trade, things like that. So if you guys want me to talk about that a little bit more, please leave a comment below or send me a direct message on Instagram. What I'm going to do here is I'm actually going to go ahead and mark up the new weekly opening gap for this week, right? So let's take a look at that. Let's go into the 1-minute time frame. And I love doing this with you guys, so you guys can actually see how to mark this up. So let's see, Sunday. Where's our Friday? Right here. And typically when you're looking for a new weekly opening gap, there's usually a volume imbalance. So if I'm looking at the cursor, whenever I hover over the candles, there's a little menu, or like a little box that pops up at the bottom, and it gives you the time and the date. So we're looking at Friday. So right here, that's Friday, 4:59. And we want to look at these numbers up here. We want to look at the C. The C is the close, right? So let me move that a little bit. At the bottom, you see that that's Friday, 4:59 p.m. The close up here was 16,094. So we want to go ahead and mark that 16,094. And right there. And again, you can start it and just extend it in time. When you hover over that candle 16,094 even, you can tap into here, coordinates, and make sure that those are exactly where they need to be. So that's Friday close. Now we want to look at Sunday open, which is this candle right here. If you look at the very bottom down here, that's Sunday, 6 p.m. We want to look at the open, which is this number right here, 16,093. Let's go ahead, 16,093. And I'm measuring over here. This is price 16,093 right there. And again, it doesn't have to be perfect. You can always go back and edit the time. 0930, 0930 right there. So that right there is our new weekly opening gap. And I usually keep about 4 to 5 of these from the previous weeks, because sometimes price does like to come back to those areas. And I like to personally see, I like to personally see if those areas are going to get respected in the future, right? So let's look at the 5-minute time frame. Let's fast forward to where we are. So clearly you can see that price has already been playing around. We want to go ahead and extend NWOG over, and then we'll see how price plays out for tomorrow, right? I am going to be, let's take a look to see. I'll go ahead and close all these guys for y'all. I'm just going to try and see where price is likely to go, right? So let's look at the 1 hour. And I do have a lot of markups on my chart, and I keep these on my chart to kind of show you guys what I'm working with and what I'm doing. But typically at the start of the new week, I clear all this out, just so I can have a cleaner chart. We could potentially come back into this fair value gap from the 29th of November. Is it likely? I'm not 100% sure, only because we have already taken these highs out and then moved lower. What I can see is this gap right here, right? It's open? Yes. Do we want to see it stay open? Yes. But we have tapped into it with this wick. We could potentially see price come back up like we did last week, tap into new weekly opening gap or closer somewhere in here, and then continue down to target the lows. Why would I say that? Because we have this low that hasn't been untapped to, this low that has not been that's been untapped, and then this low that's been untapped. So I want to see if those are going to be taken out this week. But the only thing we can do is just wait for price delivery and see what price is going to give us, right? So that's going to be it, guys, for this YouTube video. If you want to go into my Instagram, send me a DM on what kind of topics you guys want me to talk about. If you guys want me to load videos on a Friday or Saturday instead, I know a lot of people are with their families or off trading or back testing those days. So if you guys want videos a little bit sooner versus Sunday going into Monday, please let me know. Leave a comment below. I really appreciate you guys being here. For those of you that are here, if you've been long into this journey and followed me this far in, please give me a thumbs up, give me a like on the video, leave a comment below again on what you guys want me to talk about, because at the end of the day, I make these videos not only for myself but for you guys also, so you guys can have a better trading journey, right? So that's going to be all. I hope everybody has a great week. Let's stay focused. Remember, risk to reward. Let's keep it at 1-to-1 and follow your rules, everybody. Other than that, you guys have a great week. See y'all next weekend.